let's pull this up here. Okay, it says we're live. Let me just make sure really quick before we go into the breakdown. Let's see here. Okay, cool. It does show that we're live, so cool. Okay, so first I'm gonna kind of just look over the stuff of the Discord. I'll talk about the move that we took today on the stream. We did take a position to where very similar to the day before, where it was more of a short to buy situation, right? Bullish continuation type of situation day. Protect yourself or pay yourself at point of interest is a really, really good mantra to live by when you're in favor of a certain position. So what I mean by that is, like, if you took a sell position like we took up in here in these 24,200 areas, and you sell it down, right? Actually, excuse me, we sold here in the 24 like 170s, and you sell down and price doesn't go and break structure lower, then you're most likely inside of a demand, inside of a point of interest, and price has the ability to still hold that bullish structure. Okay. So I'm just looking at our chat here really quick from today. And then if you guys are in the Discord, then obviously come on here if you like, or I can open up the chat. Just let me know. So let's see here. Okay. So I do believe I can bring up the both, but I'm just going to stick to here. Okay, so let me look at the live trading chat here. So we had a lot that we were talking about today, but one of the main things was dollar index and oil, right, really being a factor in our trade. And so we ended up looking for positions. I was looking for buys at one point. Like, I was like, damn, I thought I missed the buy to go higher, but I also knew that there was manipulation with that overnight liquidity. So just let me look at one more thing here really quick, and then let me look at the pre-market review. Key downside levels. Cool. So take a sip of this really quick. Okay. So this is NQ, H4, H1, and then the 15, so the intraday. Now, when I bring over just the, let me do this here. Okay. When I look at just the 1 hour and the 15, right, because that's what we really focus on, 1 hour, 15, 15 and 5, and then 5 and 1. What we could see pre-New York was that the overnight players had pretty much had price in their grasp of the buys, right? So they were buying this price up, and price was making higher highs and higher lows. So it looks like this, okay? So you have the open right here. Price goes higher high, higher low, higher high, right? Then you have London open, right? So London, they open the price and sells off. And then what do in that 6 a.m. to 7 a.m.? Excuse me, they go up and they close higher. So they take out those initial sellers in that first area. And I call this early players, right? When they're playing inside that London open, they come up and take them out. So now, when you look at this, like here on a 15-minute time frame, this is all we could see at one point, right? This would have been 6:45 a.m. going into 7 a.m. Now, there was a lot of news, and news is the excuse that push price to hurt the most traders. And so when you look at the news opening was right around here, right? This was the 7:30 news. They run the price up again, so they already took the highs once, right? With this candle here. So then they come again, they use news excuse to push price again to run out shorts once again, right, at that 24,200 level. So for me, coming into this with them already running the liquidity pre-New York, and then we have this move here, 7:45 going into 8 a.m., I was already looking at, no matter what, like when we come back into New York, I wanted to see if we were going to come up into this candle and then reject and fall over back into like the low of day, back below the daily open, and possibly back to 23,700. Okay, and it was just the way it looked, and I'm going to show it here on a 15.5 fairly quickly. Let me pull up the chat for YouTube here really fast. Okay, so I can see that. Okay, so, and these are all recorded, okay? So, when you look at the 15.5, okay, all you could essentially see when you're coming into this at 8 a.m. was this. All right, this is what our eyes could see, right? This is 8:15 to 8:30, and this next candle would have been the 8:30 open. So what I'm anticipating at this point, based on what we could see from structure and what we talked about in the Discord pre-market, what I'm expecting is price to deliver through this liquidity here, right? Like this is like trend line liquidity here, right? So if you start from the low of day, right, and you go to here, I'm anticipating that buyers are going to step in trying to push out that 24,245 high, right? But at the same time, what they're not seeing was the massive 5-minute supply candle that aligned with 24,150, and then at the same time when you shape that up, right, when we're looking at like this candle here, we were looking for that 15-minute area to find some kind of short inside of that 15-minute zone, right? Because we consider that as an area of supply. Now, what they did though, right, and we still were able to find a good 1 to 3, 1 to 5 position, but sometimes just because you win doesn't always mean you're going to be in the right direction, okay? And so we were looking for, as you can see here, when I just extend this box over to the 5-minute, we were looking for something in here, but also what I want you guys to really see is the fact that we wanted this 4-hour area to be reactive, okay? So what I mean by that is like, when I was looking left, I was marking up this 4-hour up candle here that aligned with 24,150 as a level of supply on H4. Also as a level of where buyers were going to take profit, right? So the way I play the markets is they move in 4 phases. Price likes to accumulate, right, is one of the phases. Price likes to mark up, so make higher highs and higher lows. Price likes to distribute, right, so it starts to break down from sell side or from buying up, and then marking down, which is lower lows and lower highs, okay? So looking at this this price on the 4-hour for my directional bias, I was seeing that we could get into this area here yesterday, and then we blasted through that. So I was anticipating this inefficiency here, 24,100 up into the open of this candle. Okay, so I just wanted to show you the higher time frame context of understanding of why I still wanted to go short, even though we have that bearish dollar and we were looking for a little bit higher pricing throughout the week, not all in one day. Okay, which can happen. So looking at that, right, now we come up, here's New York open, okay, because I want to show this here really quick. This is just what we could see pre-New York. Now we come up at that New York open. This would have been 8:15 to 8:30, and this is the 8:30 to the 8:45 candle, right? Now, why is a 15-minute wick is a 5-minute fast up candle, right? So I already knew that looking in the area that I wanted to look was going to be inside this 5-minute area. Now, one thing that I missed, right, that I didn't see inside this candle, right, in the first 15 minutes when I took this short down to New York open, was the structure had shifted, right? So that was kind of like, you know, we had the wick highs, price. One thing I just didn't notice is you see this body here on the 5. Well, this body closed higher, okay? And so for me, I had just missed the buy that I initially wanted on that 15.5 1 minute. And so I was going to wait regardless at that point to see probably a delivery of those 250s, which was the high of day, or if we were going to reject inside supply like we did. So what ended up happening for me and myself today and some of the team is I ended up wanting to short down this London area, this 24,180 level, and see if we were going to break through New York, right, and go through the New York low and start to make our way down, or what we ended up doing, which you can see on 15.5 the structure, is we had made the new highs, right, and then we closed higher low candles here, right, because they're higher than these candles here. And so structure was still bullish, you know, and that just is what it is. Now, how do we factor into that move? I'll show you guys here on the 5 and the 1 minute. Okay, 5 and 1 minute. And then I know I posted the executions somewhere. Let's see. Member wins or my trades. Let's see here. Okay, so this is the trade that we actually took. So I'm going to go over this one and show you guys the understanding. Now, like I said, what I'm noticing now here is, as you can see, is that body candle that we talk about on a 5-minute time frame closed higher high. So shorting this in a bullish market was pretty risky, right? But based on higher time frame context and what we had seen, I was anticipating that this could be a move at least down into New York Open, and then if it didn't work out, you were going to see shorts cover like we did. Same thing I always talk about with functionality is that when the shorts cover, like we covered in here, right, you're seeing buy limits, right? Because what is this, right? When a sell side move covers, what are they putting in the markets? Buys, right? So when we've seen price come down in our favor on this position and the structure didn't break, right, the New York low or 24,050, we already knew that we had a great TP on this position today, right? Because we protect or pay ourselves at the New York Open. And like I said, today I was looking more for like a base hit. So I was looking more for like, just to get that 60-point gain, rip off that 60-point gain, then look for the full 100, okay? So it's either going to be a 1-3 full trade or go down the New York Open for the full 5R situation on the accounts, okay? So that was a trade that we took. Now I'm going to go over that trade here on the 1 minute. So it can walk you through what we end up seeing and why I think it worked out. But then also where we can all learn together, right, was, like I said, that 5-minute structure closing higher was the sign that we wanted to start attacking that buy side at New York Open, okay? So what I ended up seeing was I'd seen that 5-minute candle 835 to 840 close up, close higher high, but I was like, okay, but we're failing to make that push to 24,250. So I always frame up, me personally, 5-minute candles that have fast up candles inside of them. So this was at a point of interest, London Open, 24,170s. Looking at that, all I was doing as soon as that 5-minute candle closed, so 35 to 40, is I was looking for a sign of weakness on the 5-minute, and I was looking for a signal on the 1 minute. So where I was able to frame that was I was already looking on the stream and having our risk in these highs. And I mean, as soon as we started to make this break, I started calling out 24,170s, and we were looking for, like I talk about a lot, which is point of interest, right? I showed the trade. That was our 1-3 zone. I believe the entry, again, let me look one more time. The entry was 24,170, okay? So let's just do it from that level so we can really see how it looked. Okay, so 24,170 is when I called it out on the stream. Good 5-minute location, right? We're looking for price to go back and slip that, at least that 1-3, possible 1-5, right? Times our risk. Now, here's what I was telling myself, and this is exactly what happened yesterday. Protect or pay yourself at point of interest. We've already secured the bag over 60 to 100 points, and we may not be right on the direction, but one thing we're going to figure out, right, on this trade here is once it reacts at that New York Open after closing that 5-minute body strength, is price going to continue higher here? And one thing I can say is, if you think about it today, if you were on stream with me, it's something I'll do better with, even though we had a great day, was getting excited that we had that win, because we've just been knocking off targets, right, for at least, 2.5 weeks almost, like 2 weeks, let's just say. And so I can take note of that and that emotion and that excitement and understanding of like that type of move with those wicks still available, with structure still confirming bullishness, that, okay, if a lot of shorts covered in that position, buy orders are filling at a fast rate, okay? So how could we have maybe played this a little better if I wasn't already in a profit on the shorts, right? This is how I would have played it, okay? So seeing that price, even though we've seen the overnight liquidity, price wasn't showing signs of breaking down. Price was showing signs that it wanted to attack the new high on day, right? First sign was the 5-minute sign of strength, okay? Got the 5-minute sign of strength, right? This happens at 35 to 40. Now this happens at 40 to 45. the best trades happen, right? The best trades happen with these concepts that we trade in the first 15 minutes and the last 15 minutes of an hour, okay? So when you really look at this, right, and I like to look at a 15-5 and 5 in 1 minute, right, because that's where I take my executions. Now, when you look at this, 45 to 50, you're getting bearishness. But what'd you get right here, right? You got that sign of strength candle that engulfs at where? Point of interest, New York Open. So again, buyers are fighting the area of 24,086 or 88, right? That's the New York Open. They're not letting price go lower. They're defending, right? I said this is trendline trading area, right? Liquidity. But what they're essentially doing right here is defending that initial low, because this candle opened New York. They come down, they never break, and they're still defending that low. So right here, guys, this is something that when price confirms that bullishness like this and then comes back into the area and closes strength, my eyes are seeing this at this moment here, okay? As soon as I see this, right, if I wasn't already in those shorts and my TPs hadn't already hit for that New York Open point of interest play, then I'm looking at something like this and I'm starting to evaluate it to take out those highs. Now, as soon as I get that sign of strength, because I like to see the sign of strength and then play a 1 minute mitigation, this is how I would do it. My target would be the high on day, and I would draw a line down the candle in the 5 minute that shows me the sign of strength. Now, guys, I'm literally, it's kind of crazy the type of money that we've been making in these last few weeks, especially these last 2 weeks, and people only see the recordings of this stuff, and I'm literally giving away the gems. Okay, so price comes into that candle and it closes. Now, what I always talk about, can you identify a 1 minute mitigation on the right side of the 5 minute sign of strength, right? So on that sign of strength right here, this is going to be where that candle closed. And then can you identify between can you identify between 8:55, right, and 9, a 1 minute mitigation that you could play that would put you on this right side? Right, so you're essentially looking at, as soon as this candle closes, which would be 850 to 855, so 855 is here, right? And it's closed, that candle closes right there. Now, what I'm saying is, this price after this candle here on the 1 minute, right? This price after this candle, because this candle is the candle that's going to close, right? The 55 candle. Can you see a 1 minute mitigation on the right side of that, right? And so what you do is you start to frame up or plot positions on that right side to get familiar with this, okay? So like what I like to do is make sure it shows up on both windows. Right, it shows up on both windows and you're identifying a 1 to 3, and then obviously your target would be the highs. Now, when you take this trade, the one thing I want to show as well when you're looking at that 5 minute is this would have been a pretty good trade, but the best trade that you're going to take, even on the 1 minute, no matter how you look at it, is if you try to frame up the special 5 minute dump candle. You guys will see me talk about this candle all the time. It's the special candle that I frame all the time that gives me the best R&R. So saying this would be still a really, really good trade. Also, if you're looking to deliver that new high on day, that's like, you probably partialed out half the move if you're trading the way that I show. So 1 to 7 would still push you at like a 3.5 R plus your 1.5. So you're still sitting over 4 R for the day, which is amazing. Okay. Now, if you think about it from the perspective of what I'm saying here is that buying below New York Open in bullish conditions, like if you're seeing it as bullish and this 5 minute candle's already closed, you're trying to frame your 5 minute entry inside that 5 minute candle, right? Opposed to trying to frame it up on a 1 minute, me personally. Like I want to take the trade when it's inside the location of the 5 minute demand candle, okay? Because no matter how I take that 1 minute trade, it's going to frame up really nice as long as I frame up the right candle on the 5 minute demand, okay? And so I want to show this on the 15 and 5 here really quick as well. When you take a trade like that on this position, like I said, the structure was still proving bullish. You have this candle closes higher, and then you see nothing but higher lows from like this area here still closing. So really, really good location on a 15 as well. Like when you're looking at a special candle for a 15 minute dump, that would be all this price here, but what we're looking at is going to be like this whole candle, right? And then I like to measure that candle by 50%, so I like to know where that candle's 50% is. And if I take entries, because you guys know I watch 15.5 down to 1 minute. If I'm taking entries on that candle, I want to be taking entries on the 50% below side. So I want to be taking trades from the bottom of the candle, right, to the 50% area. That's where I want to stay. Now that's on a 15. Now on a 5 minute, inside of that area, so I'm basically just looking at everything. If you think about it, from here down, right, as you can see, right, like in this area here. So everything below that 50. Now on the 5 minute, I want to be able to align inside of a 5 minute candle, and that's what I'm showing you guys here as part of my entry strategy is finding that area, and it's always usually in alignment with point of interest. So like instead of trying to like make it up or try to just force it, each time you find a setup like this, like look at this one up here, 9:30 to 9:35, and then 9:35 to 9:40, and then what time? 9:40 to 9:45, last 15 minutes of the hour, it comes into where? A 5 minute dump candle that's in alignment with London Open. And that's because players just play, at the 2 a.m. They play the most at the 8:30, so the most volatility and liquidity is going to be injected in these areas, and people replay those price levels again, okay? So, showed the shorts that we took, right, with the stream. Like I said, we're like 2 weeks of wins, pretty amazing, pretty grateful. But on the learning lesson of this, right, is just like I talk about when we're looking for a capitulation balance where price will essentially, let's do this over here so you can see it. So where price where essentially will just fall off a cliff, and we say, oh, okay, cool, shorts earn a profit from overnight. How are they going to get out of the move? Let's say that there's like a W pattern like this right before New York, right, and they get close to it. And then we see them spike it, right? So they spike the money, right? And then we know at that moment when they spike that money that shorts, right, they're pressing take profit because they have buy limits set under this area. And what happens? Market pulls up and then starts to rally higher, right? So same situation, right? Even though we weren't in the right direction, but we still were able to squeeze out a win today. Same situation. When I took that short on that 5 minute area in those 24,170s, I'm looking for two things, right? I'm looking for the break of structure lower. So I'm looking for from that move here, that break lower, and then something like that to test, to like retest and then continue lower. Or I'm looking to, like I talked about on the stream live, right, was to protect or pay yourself at point of interest, right? So short side, protect or pay yourself as we're paying ourselves, right? As we're taking profit, buy limits are filling, and the move runs up high, right, for the day. And that goes with our overall bias, what we wanted, but we still played what we wanted, played what we had to see, played what we seen, right? And so I'm more grateful for just being, just executing and still being able to squeeze out a profit. But at the same time, you got to understand that like the functionality of what was going on in that situation and how many people were probably taking profit on shorts. Okay. So let me look at the rest of the market here really quick. Going into, let's see here. Going into tomorrow, I think we're really overbought. I'll talk about in the Discord let me write this down actually too. I'll talk about in the Discord tomorrow. Oh, that's why it's like that. Sorry. Dang, I gotta rewrite that one. So I'm gonna talk about the Discord tomorrow. Let me write this one thing down. The Wyckoff. Four phases, and I'm also making videos on these right now, but I'm just trying to make sure I'm connecting them. And then the Wyckoff price cycle. Okay, so because the Wyckoff price cycle will really make sense with this, but to me, the market moves in four phases, like I spoke about. We're accumulating here, as you can see on the very far right for NQ, and then everything here is higher highs and higher lows. Right, so if we start to distribute, I would anticipate distribution in more of an area, let's see here, of more of an area on the 4 hour, right? So 24,400, I would anticipate it more like somewhere in there. Or what we've talked about, which is last Wednesday's highs in that 24,500. But whenever we do get to the point, and maybe we're at this point now here at 24,300s, starting to distribute, so the market moves in four phases. It accumulates, it marks up, right? It gets to a point where it distributes, and then four, it starts to mark down and starts to cycle all over again. Okay, so looking at where our low is coming into the week, we have this is our low, this essentially is our high, and then we want to use our Fibonacci retracement tool to see where that 50% of the range is for the day or for the week. And so key level still 23,700. The inefficiency on the way up, right? I think is a really, really nice level to see if we can start to get back to yesterday's previous day low, because now that's going to be the previous day low, which was yesterday's low, which would be, let's look at this candle real quick, 23,880. Okay, so what I see going into with it being what today's going to be Thursday, let's go ahead and do this really quick. What I'm seeing right now is probably like a rollover, right? Depending on how they played this overnight. But looking at the 4 hour, it looks like they're going to roll over back into yesterday's initial balance. And then taking a look here at the dollar index, if we start to find this strength, let's just trying to get this to load here, sorry. Okay, I was like, what the heck? But if we start to hold, right, demand, right, inside this 99.50 level, so like basically in here, if we start to hold this overnight and we start to show that we're going to continue up still, like we're not done on this bigger accumulation, then I would say we could definitely see a rollback into yesterday's initial balance. And then let's take a look at oil. I talked about oil a little bit on the stream as well, and just keeping our eyes on that to understand what's going on with NQ. And so looking at the end of the day tomorrow for oil, and based on how price presented, price tried to come up, and essentially at New York Open, they tried to go higher than market open, 181.80 level, right? Tried again to go above New York in the 100 psychological level and failed to break that level. So now, this was the LOD. Now this is going to be the previous day low. Okay, so I'm going to move this. This is going to be the previous day low. And I think that we could make our way down below 96 into the FEG here, 95 on oil. So if we're going to see weakness on oil, right, that'll be interesting. But if we see, a pop overnight that goes and takes, the market open and goes back above $101 a barrel, or starts to even act like it wants to attack back up to 102, then that'll be, really interesting. So let's see what the daily looks like, and then I'll probably hop off here. So yeah, I'm me personally, and when I look at this from a daily, 4 hour, and then 1 hour. Let me do this really quick here. When I look at this from that perspective, right, daily 4 hour, I see more downside on this. So that's why I think that we'll have to I don't want to predict or try to guess, but like I still see this coming down slightly. We'll have to see how the overnight plays. So I'll look at gold here really quick as well, because I am monitoring some swings. I don't actively play gold as much. Like I don't play it for like intraday trades and stuff like that, but I do like to watch it for this perspective that we're looking at here. Okay, so looking at for tomorrow, obviously we're in a really, really bullish run. Right, we're in a bullish run. 4 hours directional still pretty strong. Target area for me was to get back above 48.50 and get it back above this wick and maybe even touch 49, and maybe we see a breakdown after that, because looking at structure, everything's pretty similar, but like looking at the structure, this was a nasty fall. And so just this basically being like a break lower to then bounce, it's going to have to show me from the previous high, so like this, to this low here, it's going to have to show me. So I went from this high to this low with my fib tool, that it can break past 50% of this range. If it can't break past 50%, or this like 49 area, the FEG, the 50% of this area, so essentially here, then I don't see price being able to make its way higher then, right? So we'll see. 2026 opens there. We're obviously still making our way pretty bullish, and then I'd like to see what they do here now in the overnight. So cool. So we went over the positions really quick. We went over oil. We talked a little bit about dollar, what to expect, what to look for in the overnight, and then we talked about me personally, if I had to say, okay, this is what I do believe based on what I can see as of right now, I would anticipate that we could get let me just delete these boxes, sorry. Based on structure and based on like 4 hour, let me just do this one more time. I would rather see a rollback over into 23 850s or back below Wednesday's daily open. Okay, so hope this helps out. Hope this helps out with understanding of short covering, right? Protect or pay yourself at point of interest is a good mantra to have, because that very well could have just went down to our area essentially and broke the level and just continued to fall through that low day because it was just crazy. Okay, and so yeah, you live and you learn, but that's how you're going to be able to profit, by just having experience and troubleshooting, as I like to say. You're essentially going to become a troubleshooter in any situation. You're going to have to know if the plane's inverted and it's on left engine's on fire, what do you do? So I appreciate you watching, and again, we'll be on live with the Discord again. We're on a we've been on a heater since the 24th of March, right? We haven't lost in the group yet, so we'll be back on YouTube most likely this Friday for New York session. So I'm going to do like Mondays and Fridays. I'm going to try my best to do the live session. It's just a lot harder to hop on and set up everything for that. So we'll see how everything goes over in the overnight, and trade safe. But talk to you guys a little bit later.